What's going on, everybody? Welcome back to the channel. Today we're going to talk a little bit about cash on cash return in real estate. One of the best, if not the number one ratio or metrics that an investor needs to know about. When you're talking about real estate and investing, you got to know the return that you're getting on your capital that you're deploying. And one of the best ways to do that is by calculating the cash on cash return. And so one of the things that we're going to do is just always just come in with different terms to share with you guys to kind of help round you guys out as real estate investors and help you make knowledgeable decisions when it comes time to invest your capital. So the cash on cash return is just simply your annual before tax cash flow divided by your total cash invested. Pretty simple. So if you got a rental property, you're going to take your income that you generated over the year. You're going to subtract out your operational expenses. And then you're going to divide it by how much money you put in the deal. And it's pretty straightforward. One of the most straightforward metrics that you can do kind of on the back of an envelope, as they say, in order to understand, hey, is this investment worth my time? And as an investor, you need to understand, hey, what's a good return on my money? Am I good with 4%? Am I good with 10%? 20%? And different strategies lend themselves to have better cash on cash returns. As a passive investor, I know most investments that I look at, usually between 8 to 10% cash on cash return a year is pretty good. But on the flipping side, as a flipper, I may see a better return on my investment because I leverage debt and not have to deploy a lot of cash. And so you have to take those into account when you're calculating your cash on cash return. But we'll go over a quick example real quick just to help you guys out. So say you have a rental property and over the span of the year with your rents, that rental property produces $15,000 of income that year. And your expenses are about 33%, which is really good. Might be a little bit more, and that's for you saving for CapEx and, for maintenance and other repairs that may come up that you have to do during the year. And so that's about $5,000. So if you take that 15 minus 5, it leaves you with $10,000 that year. And say for your down payment that you put $35,000 down on that rental property. And so now you have your numbers where you can go in and make that calculation. So you take that $10,000 after you subtracted out your operational expenses, so your net operating income, and now you divide that by $35,000, which you put down into the cash that you invested in the deal, and now you have your cash on cash, which will come out to be 28.5%, and which is really, really good. And whereas that if you're in, say, I've seen it in like markets like Birmingham, whereas that you may buy a $30,000 house or a $35,000 house cash and you're making $750, $800 a month, whereas that you can turn your money over, you essentially, your cash on cash return is pretty high. You won't get a lot of appreciation over the years, but your cash on cash return is really high, and you'll have all your money back essentially in around 4 years, between 4 and 5 years usually, with that type of investment strategy. So yeah, there's different ways, different investments to look at, but one of the biggest ways to evaluate a cash on cash return, whether you're looking at rental property or you're looking at apartment buildings, just looking at that capital you're deploying and understanding, hey, based on what I'm putting in this asset, should I make the decision to deploy here, or could I get a better rate somewhere else? And or could I invest in myself and be an active flipper? Or do I know I don't have the time to be an active flipper, but I'm going to invest my capital with another syndicator or with someone that knows how, that has a fix and flip business and knows how to run a business, and invest my capital with them to get an 8 to 10% return on my money over a year time frame. So this is one of many, financial terms that we're going to go through with the Just Our Investor series and talking through. But just wanted to share this with you guys. Make sure you hit the thumbs up and the subscribe button, and we'll see you on the next video.